Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're taking a look at some old school strategies I'm bringing back to help increase my credit card approval odds as we continue to put up our shots for approvals to make the bank's money, our money, in this more difficult time, you could say, to find approval. So, of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, you're no stranger here. You know, I like to say shoot or shoot, and we take credit inquiries like Skittles, meaning that I'm not really worried about throwing in an application. I'm not really worried about the credit inquiry. The money is, the upside is so high and the downside is so low once you generally have an established credit profile. However, the issuers have since tightened up, I would say substantially, since I'm going to say about 2024. If I look back on it, 2024 was like the year I put in I think 20 or so applications. Doesn't mean I got approved for all of them, but I got approved for quite a few cards back in the day. And ever since then, we've seen more and more issuers start caring about the 524, which is if you've opened 5 new personal cards in the last 24 months, you're going to get denied. They started caring more about inquiries, about available credit, unused credit, banking relationships, all that good stuff. And of course they care because it's one, either you're going to be looked at as a risk, because why are you trying to get all this credit so fast? Or number two, unprofitable, because why do you have all this credit and you don't need it or use it, right? And we're going to go through some more of the reasons. Basically, we're going to take through some of the key denial reasons and talk about what we can potentially do to, I'll say, mitigate them at best, potentially. Again, some of these won't necessarily be revolutionary to you. It's really more so that, well, I've known these things, and you've probably known them too, coming out of 2024 and then going into denial exile, because I couldn't get any approvals going for so long. Now coming back out of it, now they seem to be more important, so we got to go back to basics, and I thought it'd be fine to talk about them. So no particular order here. We're just going to go through them and talk about. Now, the one thing I do want to point out is the problem with all of these is outside of 524, which is a solid number, we don't really know specifics. I don't at least know specifics of what is a good number versus what is a bad number. It's going to vary between banks. So, of course, the more intel and data points you can find, which will take us to number one, which is finding intel and data points. Data points are just folks commenting about hey, they'll put their vitals basically hey, I applied for Citi Double Cash. I was 324. I had no accounts with Citi, or my last account was this. Historically, I haven't really paid attention to these things, but it might be becoming more advantageous for us all to crowdsource our data and then provide and contribute to the data source pool as well, just to help land on a more precise range. Right now, of course, there's a lot of different factors going on in there. And we've seen, sometimes I'll get denied and someone else get approved, which is a weird thing because we all generally have the same credit profiles and putting up the same amount of shots. So it doesn't necessarily mean it's perfect, but more data points, the more we can build crowdsource information, the better. I do have a channel members Discord where we do similar things, more so just ask questions, points, post data points, things of that. So if you're interested, the join button will tell you more. But that's the first one. Now, the other obvious ones that you're going to see on denial letters, and the ones that I was running into the most, are too many new accounts and then too many inquiries. And this is basically too many new accounts is what they mean by 524. So some of them actually specify in the last 24 months. They don't specify how many is too many accounts, but they do specify the time range. Now, because we know that they'll stay on an open account will stay on your credit, until you close it. And then once you close it, it'll be on your credit for, I believe, 7 years after that. Inquiries stay on I think they impact your score for a year, and then they fall off after 2 years. So I think that's how they're getting the 24 months. For whatever reason, the bank has decided 24 months is the perfect time to have credit age, but they trust you again. So there's not too much you can do about this other than wander Siberian garden, if you will. Garden time is what they call when you're just kind of waiting for your inquiries and your new accounts to age out, growing like in a garden. Now, so new accounts, again, I would say one thing here is you can kind of play around with throwing in business accounts. Business cards are the ones that they will pull credit, but they don't report to personal credit. So you'll still get hit with an inquiry, but it won't push you over the account. So again, not a crazy one here, but for me, I'm at 324 right now. So I got a Sapphire Reserve Business, counts as an inquiry, but it doesn't go to my 324 stats. It doesn't move me up to 424. Just another way to potentially grab another offer without, pushing up your account level. Plus, you're going to grab a higher intro offer because it's a business card. The other benefit of business cards is generally they're a lot of spend. This one is 30 grand for 200,000 points. They do give you 6 months to do it. Now it's going to take quite some time to spend 30 grand. So if you're also looking to borderline mini garden, if you will, sometimes a business card can help because it kind of forces you to slow down a little bit on applications and things of that nature while you work on this one. And then, depending on timing and how your profile's all set up, you could see some stuff age off. Just depends on timing. So there's really not too much there. I think business accounts, the main one. Inquiries, again, this is where crowdsource information helps. One of the questions I get asked a lot is like, hey, what credit agency does such and such use? What does Citi or Wells Fargo use? And the reason they're asking that is, one, because it's nice to know which one you need to unfreeze to apply. But number two is, the issuers aren't required to report to all the agencies. That's why when you get a mortgage, they do a tri-merge pull for all three to make sure they have the most coverage possible. But there's no rule saying I have to report to Equifax, Experian, and TransUnion. So all that to say, it's entirely possible. If you were to line up some issuers, then you could say, well, they pulled from TransUnion, but I know they don't, so my TransUnion might have me at 224, but really I'm at like 424 on Experian. You could look at something like that as well. It really just depends. It's really hard to nail down who they're using. I've seen it change, but depending on what state you live in and things like that. But it's something to consider. The other one here, this is what I'm really working on now, having done the garden period, is too much available credit. You'll get a letter in there that'll basically say, hey, we're denying you because you already have so much credit. And why would you need to have that much credit? In fact, I think I can pull it up and show you in one of these credit apps. I'll pull that up and see. But again, the tough part here is like, who's to say how much credit is too much credit? We don't really know. We don't really have a number in mind. They don't publish like, hey, 100,000 is enough, 200,000 is too much, right? So with this one, what I've done is I've actually gone through and started closing accounts that I'm not using anymore. So if we pull up this is the Rocket Mortgage app. I don't get paid or anything from them. That's the one I happen to have. So we can go into, I forget which one this is, it'll show in here. But for example, you can go into, let's do account mix. You can see open credit card, so 21 open, right? You can go in here, so this, AAA card, it'll tell you the account is 2 years and 4 months old, so it's not counting. And I could have sworn they told you the credit, here we go, $10,000 credit limit, right? So what I've started doing is, I wish it didn't send you out to the main menu every time, but you can start seeing, I went in and I started closing some of them. Now, I started doing this fairly recently, so they're not going to report just yet, unfortunately, but I kind of went through here and, like, for example, I know I closed this Huntington run, right? So that was $4,750 that I wasn't really using. You can see how old it is, so it's not necessarily counting towards my 524, but I'm just not using it. So if I close it, the history that you're seeing there, all those green dots, that will stay on your credit report. Not that it really matters, but that eventually that 4,750 will go away from available credit because it's not available to me. So I wrote down some that I've actually gotten rid of. Here it is. Read your notes, man. So total, I had $305,350 in available credit. Now that counts rotating, revolving lines of credit, like credit cards. That was 22 personal cards, plus that upgrade line of credit from the offer we did a while back, a few years ago. So I closed my Smartly card, which was $22,000. They wouldn't let me product change it to anything. I tried multiple times, but they wouldn't let me change it, so I just went ahead and canceled it. Rocket Mortgage credit card was $11,000. Weirdly enough, they closed that card for me because they stopped the program, and that one still reports as open, even though it's been closed for like 6-8 months now. So I don't know what's going on with that, but for this, we'll count it. Venmo credit card, I told you, in 2024, I got a lot of stupid credit cards just for the money. Venmo credit card, $13,000. And then Huntington, $47.50. The only other card on there is I'm an authorized user of my mom's Best Buy card for some reason. I could have her call and take me off of it if I really wanted to. And then Upgrade is a personal line of credit card type product. It's not counting that. If you look at it, Upgrade, it says like, hey, we don't know how much you have, so it's not really counting in the total. But I did that. Now, again, out of $305,000, it's not that much money to remove. It's certainly some, and I was never going to use these cards again. There is no helpful product change path to these cards. So that's what I did. I just phoned them up, asked them to leave, asked them to close it, and it's fine. They really don't care. Again, who's to say how much available credit is too much or too little, though? And which brings me to the other part. And before you start closing cards, I would say, these are the cards that I can't product change to anything useful either. So there's that. A lot of cards you can product change to more useful things, so there still might be value in keeping them. But hey, I didn't bother with business cards. Again, they don't report to personal credit. Now, too much unused credit, a little bit different. That is basically saying, hey, you've got $300,000 of credit you're just not using. Now, part of that, which you can do, is what I've also been doing for a while now, is just let the statement close, which is not saying you go the full grace period and then you take interest here. That's not what it's saying. It's saying make your payment when they send you the bill and say your payment's due. If you do that, you turn on notifications, you turn on auto pay, something there and say, hey, your statement is due $1,000, pay it by, it's normally like 3 weeks from that date. Just pay it then, because the balance is going to report, and then you'll have an on-time payment, and it'll show you're using your credit. Again, how much credit is being used is too much, too little, I don't know. I don't know that we're ever going to know, but I don't think they really want to see a bunch of unused credit, right? So why would I extend you more credit if you're not using what you have? Now, to that, there's another thing that you can do, is that you can see when we went through all those cards to get rid of, it really didn't do that much of a damage. What if I lower those credit limits? Because, again, a lot of these cards from product changes, those Chase Freedom cards are like Sapphire, were Sapphire cards, and Sapphire Reserve was a Visa Infinite. So some of them $10,000, $20,000 credit limits that you're just never going to use on a Freedom. I may never even use the Freedom cards to begin with, but they all have significantly high limits because of the product changes and all that they got. And plus, the banks just give you a ton of credit limit. This last Cash Plus card I got, they gave me like another $20,000. There's no reason to put $20,000 on a Cash Plus card. So this one, I think, is a worth conversation, because you can phone up and, from what I understand, you can ask them to reduce the credit limit. And that's likely the most effective way to lower your credit limit, your total available credit limit. However, I would imagine that if you did that across the board, you went from $300,000 down to like $100,000. Like, that's going to reflect poorly when they go and pull your credit next time. Because I think I can see the history of it, I think. And, that's got to be, I don't get the rationale with it, nor do I want the rationale from the bank. So I don't know that I would go ahead and do that all at once across the board. You could pick a few perhaps, or what I might consider doing is the next time I go into credit card exile is then do it, so I've got like a year and a half, 2 years to push them all down. So by the time I'm out of credit card exile, maybe it doesn't reflect in the credit report as much when they pull, and doesn't cause for concern. Again, I put that one in there because I'm more so open to anyone who's actually done that before. I haven't. It's something I'm considering, but that's really going to be the only way to get that credit card limit down significant. The other one, there's a few more here. Use the cards. That kind of goes with the letting the balances report. This is more of an Amex thing from back in the day. If you had American Express cards and you just simply weren't using them, you'd be in pop-up jail perhaps. If you put more spend on them, then they would be more willing to extend you offers. Again, how much, who's to say? Of course, there's the opportunity cost of using that versus something else. And we simply don't know if it's going to work. I would imagine it would help, but again, who's to say how much, for how long, that whole thing. Again, you could do some crowdsourcing data points, but I haven't gone that far yet, but something to consider. The last one, main one to talk about, is no banking relationship. Again, this one's one we've covered in the past, but basically what they're saying is no relationship with us, or not a long enough relationship. It means you don't have a checking account with us. I don't know why they don't say it like that, but they don't. So there's been two ways to deal with this. If you've go in branch and sometimes apply for a checking account. A lot of times they will offer you a credit card on the spot because they've got you in the chair. Figure why not? The other one is, like I've said, again, if you do the Sapphire Reserve Business, for example, I did the Chase Business Checking offer in January of 26 for $750. I kept the account open when it paid, knowing I wanted to wait to try to catch the Sapphire Reserve Business when the offer came back around again for the high offer. Now you got to remember that if you want to avoid the fees of some of these products, you're going to have to take certain actions. For the business checking, it's a $2,000 minimum balance to avoid fees if you choose to do that. I did choose to do that, so I left $2,000 in there. So there's that opportunity costing dead money. For me, I also kept it open because I can get referrals from that, from the second channel, from the website. So I think I've gotten $500 in referrals from that. Now, again, who's to say that having that business checking actually helped me get approval for the Sapphire Reserve Business? I had the Ink Cash and the Unlimited. I only put like $125 a month on the Ink Cash for my cell phone and internet. I don't use the Ink Unlimited at all. I don't use almost any of my personal Chase cards. So it may not have helped at all. It may have helped. Again, that's really the problem. This is who's really to say. But again, sharing data points like this, it definitely wouldn't hurt, put it like that. Worst case scenario, you get a $750 intro offer from the checking account, and then you have a better shot at the card. So I would always try to line this up with a promotional offer. But I had a Wells Fargo checking account last summer, applied for the Journey, and it wasn't enough to get me over their rules. So again, you got to figure out, like, it seems like 524 no-go no matter what. After that, inquiries may be debatable, but even having a checking account that I was sending direct deposit to wasn't enough to overcome it. So it's most likely a combination of these rules. There's definitely some knockout questions. I think 524 has always been a knockout question. And so now, again, this is not always going to work. I'm now considering it like, I'm due for a city checking bonus, but now do I wait and try to time that around when I see like a City Strata high offer perhaps? That might make more sense. But again, it's not a guaranteed by any means. So again, those are the ones you mainly see, denial reasons you mainly see, and some things we can do that I'm working on doing. Again, the garden one's pretty obvious. The last thing I debate is also how to spread these out. The benefit of the 2024 for me was I put up a lot of shots very, very close together. Because a lot of those cards you saw didn't take a lot of spend. I was just trying to get any money that I could, so they fall off very easily. So you could either do a bunch all at once, and then the benefit is they'll fall off all at the same time, or you can kind of spread them out and always be in a rolling 24 months to try to continue to gradually get offers. Right now, I'm leaving 2 spots open, at least for the time being, for some flexibility. But anyways, those are some steps I'm trying to take to increase my approval odds, hopefully, and because there's just too much money out there to not do anything, and sometimes we have to change our strategies. Even if we don't care, we have to care because the person with the money cares. So that'll do it. Let me know what you're doing down below. If you've had experience with any of these or some crowdsourced data points, love to get your thoughts on all of it. And of course, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week. And of course, we're make here every Sunday with all the news you can use in the week that was in credit and finance. And of course, every single day over on profitablecontent.com, which is the channel's blog, always linked down below for you, and on the channel homepage. So if you want to get started taking some shots on deposit accounts, well, we definitely have you covered over there, maybe even a credit card offer or two. Anyways, guys, that'll do it for this one. As always, thank you so much for watching, and talk to you very soon in the next one.